To keep you updated on the capital and financial markets, here is a recap of what happened.
The Monetary Authority of Singapore is looking to enhance investors' ability to seek civil compensation for losses suffered from market misconduct. The proposals are to facilitate self-organization, provide access to funding and reduce legal barriers to civil action, it said in a consultation paper issued on the 24th of October as part of the next set of measures to boost the local stock market. Mars noted feedback that retail investors find it difficult to self-organize and get sufficient funds for legal advice when commencing civil action. It also received feedback of a need to guard against frivolous legal actions which would place undue burden on the market. Bursa Malaysia Berhad will pay the Securities Commission Malaysia a new annual fixed regulatory fee of RM28 million and a derivative levy equivalent to 37.5% of derivatives revenue from fiscal year 2026 to fiscal year 2028. The total payment will be capped at 35 million ringgit in 2026, 40 million ringgit in 2027 and 45 million ringgit in 2028. On the 17th of October 2025, Bursa Malaysia announced that the SC had granted approval in principle for its proposed revision of selected listing and regulatory-related fees, which is expected to take effect on the 1st of January 2026. According to the company, this extra income would largely offset the higher regulatory payments to the SC. The current regulatory fee arrangement is for a 3-year term and will be reviewed prior to expiry in 2029. Shares of Indian money managers and stockbroking firms tumbled on the 29th of October after the market regulator proposed rules for the sector, including caps on some fees charged by mutual funds and brokers. The Securities and Exchange Board of India suggested reducing the fee paid by asset managers to stockbrokers to 2 basis points per trade from 12 basis points, and lowering exit charges on equity mutual fund plans by 5 basis points. SEBI has invited feedback by the 17th of November. Chinese shares pulled back from a decade high on the 30th of October as US President Donald Trump and Chinese President Xi Jinping concluded their high-stakes meeting in South Korea that has fueled cautious optimism for a potential trade war truce. Investors appeared heartened by signs of cooling tensions between the world's top 2 economies after recent escalations, while also positioning defensively with a sense of déjà vu that the real deal may offer far less to celebrate. Previous trade negotiations have seen promising starts followed by setbacks. Taiwan is pushing ahead with plans to become Asia-Pacific's next asset management hub by capitalizing on its strong industrial base and innovative financial products such as active exchange-traded funds. Last year, the government unveiled plans to develop Taiwan into a major asset management hub in Asia-Pacific, with the goal of doubling assets managed on the island to 60 trillion new Taiwan dollars by 2030. It's early days yet for Taiwan compared to regional hubs like Hong Kong and Singapore, which have well-developed tax regimes and high mobility of cross-border capital flows, Cao Qingping, Deputy Director General of the Financial Supervisory Commission's Securities and Futures Bureau, acknowledged. FIMM is pleased to announce the release of its latest annual report, now available on its official website. Link in the description.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.